Good afternoon, everybody. And my name is indeed Koen Terwel. I'm from the Association of Financial Markets for Europe, which is an association that focuses on how we can build, innovate, grow capital markets in Europe. And we've been doing a lot of work on how we can build DLT infrastructures and DLT ecosystem, which is exactly what we're going to talk about in this panel. I realize it's been a long day for everybody, but I think it was worth the wait, or worth your sticking around for this panel. Obviously today we've had presentations and discussions around cash, around regulation, around infrastructure, around use cases, and I hope we can bring all of that together in this panel to talk about how we're going to move towards a holistic infrastructure, whatever that means. It's a great panel, and I'm just going to ask everybody to briefly introduce themselves, starting with Tim at the far end.
Yeah, thank you very much. My name is Tim Armbruster. I am the Group Treasurer of KfW. KfW is the Promotional Development Bank of the Federal Government of Germany. We have around 450 billion of debt outstanding in bonds worldwide. So for us, it is very key what our dynamics in capital markets are. And of course, we want to have a close ear to the market, also to the latest development like distributed ledger technology.
My name is Lidia. Please excuse my voice. I've been talking too much all day. I'm the CEO at BX Digital. We just received last week the DLT trading license from the FINMA in Switzerland. So it's very much comparable to the TSS license that we know in the EU. We are the first institution receiving that license, and we are offering trading and settlement of tokenized assets. Our clients are banks that are connecting to our trading systems, and we are trading and settling all asset classes ranging from equities to bonds to funds to structured products.
Hi, Basak Toprak. I'm the EMEA head for Kinexys Digital Payments. Kinexys is a blockchain unit under JP Morgan, and we bring together money, assets, and data on our Kinexys platform. And we're also part of Partior, which is a multi-bank shared ledger. Look forward to this discussion.
Ivica, Aračić is my name, so I'm the CTO at SWIAT. Yeah. Luckily, Jonathan just introduced SWIAT in the previous presentation, so I keep it short. So our goal is to provide everything, all these puzzle pieces that financial industry needs to scale digital asset use cases. So of course, we have things like tokenization engine, settlement engine, and then a network which is permissioned and embedded in a governance framework where financial industry feels comfortable to move to, and well, all of this is like real and in production, and yeah, Jonathan just demonstrated like we have 600 million of let's say issuances in sum on the platform, so it's working and ready to scale.
Hi, my name is Julien Clausse, and I'm working for BNP Paribas CIB. I'm heading a department called Asset Foundry, working on all things related to tokenization and digital assets, and working hand in hand with all the business lines actually as part of the CIB, from origination to distribution to custody and even beyond. So we are looking at topics around debt instruments, fund shares and cash, notably with wholesale CBDCs.
Okay, thank you all. That's, as I said, a very, very good panel, and I think very apt for this discussion. What I would like to do is start with, the panel's name is The Road Ahead to a Holistic Infrastructure, and I think the question first is, what do we mean when we talk about a holistic infrastructure, and also how holistic does it need to be? If we look at it from a value perspective, are we looking to build a whole new base infrastructure also for the real economy? Are we looking more at building an infrastructure for certain DLT use cases in capital markets? Is it somewhere in between? Are we moving from one to the other? So what do we mean from a value perspective when we say a holistic infrastructure? And Julien, maybe could I ask you to give your sort of first 2 cents on this broad question?
Yeah, sure. Actually, interestingly, holistic can be taken from 2 angles: for the infrastructure itself, or for the approach we want to take for this infrastructure. So, and I think it's twofold. It's about the infrastructure and the networks, which is one thing, and the use case is the other thing, to think globally and end-to-end in the value chain. So if I step back, basically what blockchain brings to the table, so everybody knows that. It's really the ability to have some assets move onto a network on which anybody can connect to, at least if this network is open and permission, it doesn't matter. So some participants can connect to the network and provide services on top of a token moving onto that network in a trustable way. And by the way, we say blockchain is the engine of trust, yes, for transactions, not for what's written on the blockchain. So we'll need intermediaries in any case that will write this data onto the ledger, making sure that this data is trustable and move accordingly. And that's interesting because there are actually 3 layers. You've got the network layer, the rails, the tokens on which it's circulating on that layer, and then the services on top. And that's a consideration. For the last few years, it was all bundled. Like everybody was building networks, tokenization services, and all together in offerings, which led to this some sort of fragmentation you were mentioning, and back to the holistic view. But if I take an analogy, we have rails on which some trains can move. Some trains can be permission, like the Eurostar. I need to show my passport to get into the Eurostar. And some are permissionless, like the underground. Everybody can get into the underground. And then on top of the trains, I provide services like meals to my passengers in the Eurostar. And that's the kind of architecture we see more and more, the unbundling. And there's some consideration about, okay, let's work on the rails. Then the trains, everybody can deploy trains on these rails the way they want and can differentiate. Some would provide, services that are different. For instance, we've integrated ESG data in tokens, but you can differentiate on other things. So the discussion about the holistic approach, I think, is happening on these very low-layer networked elements. And it's not a competition on the tokenization capability, because everybody can differentiate on that, and it'll be a commodity. But what's the infrastructure? What are the rails we want to work on? And that's the thinking we have, I think, globally in the ecosystem.
Great, and maybe let's get back on to the real analogy in a little bit as well. But I want to stick to that sort of. So you're essentially saying we should focus on the rails, on the infrastructure, and then different services can be built on top. But are all those services valuable? In other words, is it valuable to be selling food on the underground, for instance? In other words, are we going to end up with a DLT, with DLT being used for certain services, certain use cases, whereas for others we will use the traditional rails? Basak, is that something you can come in on? I know that JP Morgan obviously has had a strong history in repo on DLT. Is that a use case that you think, yes, that's where DLT makes sense, but a lot of others it doesn't? Where does the value lie in your view?
Sure. I think obviously we can take different lenses to look at this, and the lens that I'm keen on looking at this from is, to make this feasible and valuable, we need either of the 2 things: multiple participants and multiple use cases or multiple types of assets, and ideally all of them all together, right? Even then, I think we also need to recognize that it's impossible to talk about one shared network. There will always be multiple networks. That's one reality, and the other reality is that there will always be, for a period of time or for maybe a longer period of time, there will be both, the traditional chains, the off-chain and the on-chain world. So these are the realities we need to live with. But I think we have seen from, Kinex's perspective, we have seen the benefit of bringing together multiple players as well as multiple assets on a network. And the utility that they bring to different use cases, and how you can then create, composability and move from one utility to another. You can come out of repo, do an FX, you can pay to a counterparty, meet your payment obligation. So all of these stitching of use cases, FX, etc., this is where you actually really create the value that for the clients who use these use cases. So that's the kind of holistic space that we need to move to live the value of the DLT.
So a mixing of use cases, essentially, a composability of use cases.
Yes, yeah.
Does anybody else have views on this you want to come in on? Tim, go.
Maybe I can add, because I see that on the asset itself, I wouldn't differentiate. So we see all types of assets being actually, or it would be beneficial for all types of assets to be on the blockchain because just added functionality. It totally depends on which assets you put first on the blockchain due to different reasons. So we wouldn't differentiate it along the asset classes, but we differentiate strongly along the value chain. So for example, we wouldn't put trading on the blockchain because we believe trading is something that works very well off-chain. There is not much added value. Opposite, you add certain challenges such as market making, which is very difficult on-chain. However, we see that the biggest added value on the settlement layer, so that's where we use blockchain. So it's a bit of differentiation across the value chain where we're gonna make it.
Yeah, probably I would add something to the discussion about rails, and I fully agree we need to focus on the rails. But I think we have to focus also on about autonomy on regional rails, which does not mean there cannot be interoperability between those regional rails. But in this geopolitical world, I think it's very well thought through that we have an infrastructure here in Europe. There's definitely infrastructure in the US, and there will be infrastructure in Asia. So we need to look in that point. And I think rightly said, on those rails, we need the services, and we want to have competition on the services. I mean, we are one of the largest issue in the world in the swap market. We're one of the largest active, and we are a large investor. So we love competitiveness, because that means automatically less bid-offer spreads. So it means more P&L, more capital at that point to generate. And I think we have to focus that we have this in focus what the investor needs also on that side. So we need competitiveness on those rails.
Yeah, totally agree. And by the way, there are likely to be multiple rails, and depending on the asset class, and the wholesale CBDC is one example, with the asset chain on one hand and the wholesale CBDC on the other. And so it might happen there'll be multiple. I totally agree about the sovereignty elements, and we want to have the rails in Europe for sure. And to me, and I talked about some sort of infrastructure element, but it's not about technology. It's a new business architecture. It's not a technical architecture. The value chain is being reshuffled possibly thanks to this approach because we're having a single network on which assets are moving and which you can provide services on top. So the token becomes the kind of center point of all this economy. So we have to find our position in this new value chain. It's a new business architecture. So thinking about the rails, it's not about infrastructure on very low level. It's about thinking about our interaction in this new world, in this new value chain altogether, from issuance, to post-trade services, trade, etc. That's complex.
I may append here something. So, I mean, everything that has been said, so agree on it, yeah. Just wanted to go a step back, like what is actually the added value by DLT? Because we could also choose the other part. We could say, like, financial industry that has been built over the decades, it works. So nobody's like bleeding on the street and waiting for some, let's say, remedy because some, let's say, financial processes are not working. But still there is let's say, there is a lot of push by the market, and we see it, this conference being kind of held 2 times in a year, for DLT. And the question is why? And I would say, if we have the possibility to kind of motivate counterparties to join a shared centralized system, and use the centralized system to do transactions, then I would say, why not? Why building it on DLT? Let's put these counterparties into a centralized system, and then the game is over, so to say. It's simpler to build, also from technical point of view. But when we then look at the financial market infrastructure, it is fragmented, and I do not have to repeat this because everybody knows that, and a lot of entities just exist to kind of map the data from one side to the other side and to move it around, just because people cannot agree on a shared, let's say, a process and data model or a shared system they would like to work in. And with blockchain, we have right now the means at the hand to kind of motivate counterparties, also eventually competing participants, so to say, to join something which feels like a central system, but does not need an intermediary to operate. Yeah. So that's that, and like you said, it is. I would call it socio-technical catalyst, yeah, to kind of bring people to a shared system, and these people do not fear to join the system because they will not lose their sovereignty. So that's how I would describe it.
Maybe if I could just also counter a bit on that, because I believe there are certain use cases which definitely we haven't agreed on yet, and there is potential to add new shared systems. But I mean, we have billions of assets already being traded on a shared ledger, being public blockchain. So we have it. If we look at the numbers, we have billions of assets being on Ethereum as an example. I believe there is a huge potential for other shared ledgers as well, but we shouldn't lose that out of sight, in my opinion, that there is already very good infrastructure as well, where we have a functioning ledger that's actually being shared around the world as a potential ledger to go to.
And probably bring also another argument into the round, which is maybe a typical German argument, but the demographic change in front of us is, if I see that from an organizational perspective, which is coming in the next 5 to 10 years, with this existing media information break, the reconciliation efforts, a topic. Yeah? So of course, technology can be one part of the solution. Yeah? It definitely enhances also the attractiveness, as for KfW, for example, for people we would like to attract for doing these jobs. Yeah?
Maybe I'll just pick up on one point Ivica mentioned about intermediaries, which is very true, right? We have the ability to reduce some of the intermediaries, that kind of like hand-holding between flows, right? But also, of course, this doesn't mean that, you know, market making and liquidity risk-taking doesn't go away, right? There is different places for risk-taking, market-making purposes. And I think the other thing to acknowledge is that, you know, financial institutions still need to collaborate on all of these use cases, and there are roles for each of them. I think, you know, those roles doesn't really go away. And maybe also making a note of, in one of the previous discussions, there was a note around, like, you know, one tokenized deposits, one bank wouldn't use other banks' tokenized deposits. Well, I mean, I would say that banks use each other's products all the time. Banks use correspondent banking services from each other. So, you know, they could use tokenized deposits issued by another bank. They may not do it for everything, but for certain use cases, they may make a tokenized deposit issued by a bank available to their clients. So I think all these combinations are the new kind of business models that, you know, we need to be prepared for.
Right. You want to?
Yeah, just to top on that. So holistic approach and adoption and the use case and the right use cases, fully agree. And I think we're still in the early days, to be honest. Although there's some volume, I agree, but compared to the rest of capital markets. And if I go back to to the basic entrepreneurship elements, I mean, we're in a multi-sided platform business model. So you want to attract one of the sides for the adoption, and that's exactly what everybody's working on. And it's a kind of a double problem in some ways, because as I mentioned, the rails and the infrastructure, and we're looking for rails where there's enough train station you can get to in some ways. So there are multiple options, and I hear the options here. Also, you have to think about the use cases. It's a combination of those two that will drive adoption. And again, it's unlikely to be one ledger. It'll be a few ledgers. But for sure, there's got to be a return on investment to connect to these ledgers and to operate those, and enough liquidity and composability, as it's been mentioned.
Yeah, and I think that's actually where I wanted to head. So what I've heard so far is we say, well, DLT, it's an enabler. And for some people, it's a tranquilizer, apparently, to overcome their fear of joining a shared system. But it's as you said, it's a business process, or it enables change in the business processes. It can help automate. But what I'm also hearing is the value lies to some extent in composability. I've heard, you know, we need to be able to mix and build use cases, etc. But at the same time, you're saying, well, it's not going to be one network, or it's not going to be one single ledger, so it'll be a network of networks. Now, To go back to your train analogy, I spent a lot of time on Eurostar and on undergrounds, and it's incredibly annoying to have to switch trains, and you have to do a lot of walking, and it takes a lot of time, etc. So if we're going to end up with that network of networks, how do we make sure the connections are seamless or secure, that we maintain that composability, that liquidity? What are your views on the linkages? If you talk about the whole holistic infrastructure that will be somewhat fractured to some extent, how do we link that in a proper way?
I think the current situation that we have right now is like everything is fragmented. We have a lot of small islands, and I think it's also visible to the market, that this is the case. And I would say trying to solve interoperability problem right now at this very moment, it would be actually waste of time, because the first thing that needs to happen is that this infrastructure consolidates to, let's say, few or in any case less than we have now networks, right? and this is the first step that needs to take place. And Basak, what you said before, like the roles do not disappear; they're just kind of being shifted. And when we look at the blockchain technology, it is basically one role for ensuring the integrity of a shared system. It gets shifted and embedded into technology, but the remaining, let's say, roles that we have, and these are many, they're still there, and somebody needs to fill them out. And then additionally, we come also to the point, we have a shared infrastructure, but now the question is, who is organizing this shared infrastructure, right? And this is then, again, a role that exists, but is now shifted to question mark, right? And the market needs to find a solution for that, how to organize this shared infrastructure in a way that people recognize that this is not something which is adding to competitive differentiation, but actually a shared good or utility that everybody can profit from. And then you can go there and put your use cases and applications and also keep the full sovereignty over it and compete then on top of this infrastructure. And there will not be one single ledger. So this is like expecting to have one single database, so to say, for everything that we are doing in the world. And the internet is also not built in this way, right? So you have a lot of services that communicate somehow with each other. So I think we need to see how to consolidate, to come to few networks, and financial industry especially needs to see how to organize itself and how to solve the organizational problem, which is actually the more difficult part than providing technology. Yeah?
And just to follow up on that, you said, well, it's question mark as to who should govern that. Now, obviously, there are discussions ongoing across the world around whether central banks should be the ones organizing those ledgers, and that could potentially be a single one, at least for a currency area, so to speak. Am I hearing you say that's not the route to go down? Or is that still question mark even for that?
Well, I have an answer to that question mark. And I mean the following. So now that you're bringing wholesale CBDC into the game, so the central bank has announced like two approaches, like short-term and long-term. And short-term, I mean, this is absolutely the right way to do it, to provide in a quick way a solution near time, and to focus on interoperability and to accept the fact that the market is not consolidated yet. So the question is how to interoperate with the Euro system. And that's the good thing. And the second thing is, and this is more dynamic and more complex in answering, and I think there is also homework by the financial industry to do there. The second thing is the long-term solution. So there is integration model, which would basically mean we are moving target 2 securities to some sort of DLT version, and ECB would be, or Eurosystem would be some sort of an operator, and if you want to issue your assets there, you're welcome, but it would be very like restricted to something like target 2 securities. That's what I'm expecting, my personal view. And the other thing is to go for distribution model, to say, look, we have wholesale CBDC, and we are looking now for targets, we can deploy these. And now the big question mark comes, like, which target to deploy to, because there would be some eligibility criteria I would be expecting, And I think the market, the financial industry, should show the competence and demonstrate the ability to organize itself in this regard. and to provide for wholesale CBDC some sort of a target that it could be deployed to. And now, shameless self-advertisement, so with regulated layer 1, we are exactly trying to do this, right, to organize the market, to give, so to say, a blueprint how to do it, yeah.
If I may, going back to the interoperability question, and so we are aware of bridges and these kind of capabilities, but if I step back, eventually the whole value of blockchain is using cryptography to avoid double spending. So to me, it's all about managing the risk and have a quasi or risk-free settlement on chain programmatically, which is very, very interesting from financial markets. But then suddenly when we have the questions of network operated by multiple players or networks of networks and interoperability, you start to have some sort of questions about the liabilities. And that might be one of the reasons why it takes a bit of time, because these models implies multiple players, and it's unclear who's liable for what, and where the risks are, and are we bringing more risks? I mean, if I'm bridging between two networks, you know, who's taking the bridge? And the risk is, okay, there's a technical risk, but there's an operational risk as well, and who's liable for what? And that's, I think, the elephant in the room. So it's not about technology again. It's almost a legal question or a risk question in many ways. And then interoperability can be twofold. It could be either I want to move an asset from one network to another, so I have more liquidity or composability for any reason, or I want to settle. So that's what we did with the wholesale CBDC. We had the asset on one blockchain, and then the cash on another one, and we just want to do a swap, which you cannot do atomically because they're not on the same chain. So you have to think about the models, first the technical models to understand that fully, the operational models, and then the liability models. So I think it's a very hard question about this holistic, you know, of networks. And maybe we should take it from a liability standpoint, because I think that's the elephant in the room. We all talk about technology, but maybe it's more that front.
And when we say this network of networks should essentially be a common rails or a common public good almost, on which services can be built, would it not make sense also from a counterparty risk perspective to say, well, the linkages in that system should be operated by a sovereign, for instance, by a central bank or by a government, or you know, just to try to make that, if we draw a picture of that holistic infrastructure, those bridges, those linkages are going to be very important. Is that something you would see as a role for the public sector or for regulated entities or something else?
So I cannot answer, but what's for sure is in today's value chain, there are different responsibilities for different assets and different roles in the value chain. And so it's very hard to say, you know what, you were doing this and you were responsible for that up to today, and tomorrow now you've got a broader scope to take care of. So I fully understand the discussions, and it's very hard. It's not even I want to go in that direction, it's another job. And interestingly, a few years back, we saw, you know, this single layer. So suddenly the whole value chain was on a single layer, from issuance to investors, with the banks, the custodians, CSDs, and everybody was willing to move in the value chain. And some of the issuers in Germany, for instance, they issued directly on the blockchain, say, hey, investors, you can buy my stuff directly without a bank. Some investors, they say, well, I could actually tokenize up front, so they wanted to move up in the value chain. And after a few years back, I think everybody realized it's a proper job. It's not because you can do it, technically speaking, that you have to do it, because of the liabilities, etc. Same for the custody elements and the safekeeping of private keys. Yes, you can do self-custody, but adopt with trillions of AUM, you do self-custody. You need a trustable player or an intermediary that does that for you in a regulated and a safe way. So it's back to the question of liabilities. And trust me, and I'm sure it's the case for everybody, the time spent for the terms of and conditions of a tokenization platform with lawyers is a huge time you have to be willing to give away, because that's the core of the discussion, terms and conditions.
I totally agree on the point of liability, and that's what we saw like through this regulatory approval process that we went through. I mean, we are operating a regulated settlement system on a public blockchain. So imagine, I mean, we had like around like 2.5 years talking with FINMA on that topic. So what is the liability, and who is owning the asset at which point in time, and what happens in terms of when Ethereum isn't here anymore? So those are exactly the questions that need to be answered, but they are already being answered at the moment. And I think the right questions are being asked by the regulator. But it doesn't mean then that we need a state-run solution, as you are saying. It needs certain rules, definitely. It needs regulation. I fully agree there. But running towards the state always when we don't have a solution in place yet, that in my opinion isn't the right way to go. We have to set in place rules, and those rules need to be followed. Yes, that's it. And I would also argue for the level of the ledger. So there does need to be a state-run ledger. There is also no state-run internet. I mean, it's a public ecosystem infrastructure that is being run by a distributed system, and that totally works today already. No one is arguing we should, like the internet should be done by a state. No one is arguing that should be regulated as a ledger. So it's very important that we don't miss that, simply because we are in the financial infrastructure topic we're talking about.
Talking again as an issuer and investor, I mean, we have to comply to regulatory rules. Yeah? So we cannot go to any rails, let's call it rails, which probably is not regulated. And I think we have to talk about in critical infrastructure in the future. So also DORA compliancy, etc. In that point, we have to talk about business contingent management. If I look at our own organization, as we steered as KfW and regulated as a bank, we have parts of our institutions which are ECB regulated. So all those questions come to us, and I think only a rail which is regulated, and I fully agree with, we have different critical infrastructure in Europe which are not state-owned, from CCPs over CSDs over internet, whatever you say it in that point. Yeah? And I think the regulatory framework is the most important point, and how to view this if it is critical infrastructure.
Yeah, maybe to add in terms of the interoperability point, I mean, I think maybe what we shouldn't do is to wait for a situation where there is no interoperability needed. So we should embrace that reality, right? Interoperability will be there. I mean, there is when you look at public chain as well, there's no single network. You have to issue your tokens on multiple networks. So that's the reality, and we are already working with that reality. So, you know, Jonathan mentioned this in the past session. You know, Kinexys and SWIAT collaborated to use commercial bank money versus commercial paper issuance. So you get the benefits of the asset or the money being on a DLT environment. It's not just the DVP is where you see the benefit. There is a whole chain of events, and I think, you know, we need to recognize that we're not only talking about assets that are on chain, but they are also linked to other systems, and all of these points, whenever you move from one system to the other, there is a risk, there is a reconciliation. Somebody needs to make sure the risks are mitigated, and that's the reality we live in. But we need to, I think right now we're going through this of collaborating, where we are connecting our networks and making sure we create use cases where we maximize the benefits across these.
All right, okay, very good. So basically our holistic infrastructure of the future that we've been talking about would be a network of networks, it would be regulated networks in some ways, and they would be connected in some way. But what I hear as well is in a way, the immediate priority is growth, and that will probably also reduce the number of networks that we'll be talking about in the future. So if we spend the last sort of 7-8 minutes focus on the steps that are needed now to get to that growth, and of course we've seen some momentum with the ECB trials already. What is now needed to sustain that and to further build that out? Are there particular elements that you would like to see further action on? It's a free-for-all. So.
Yeah, well, I can make a start here. Yeah, well, we need to see from the perspective of the use cases, because there is one use case which is scaling on DLT, and this is cryptocurrencies, I would say. And this, I'm still wondering that banks are not including this into their service offering, because from my perspective, it's like just yet another, let's say, asset class that people want to have, right, under specific, let's say, risk profiles. And the second thing is, of course, all things that we know from traditional finance, all the financial instruments. I mean, the fact that we're moving this on DLT and increasing efficiency and kind of creating some sort of convergence between front office and back office, all these facts actually, it does not change the property of the financial instrument. Yeah? So be it in a traditional system or be it on DLT. And when I try to bring these financial instruments that I know already from the financial industry, and they will stay for longer even on DLT because, I mean, they have some essential properties that you want to keep, then I also need to kind of provide, let's say, the full feature set that these financial instruments need, right? And right now, we are at the moment of being able to do issuances, doing first experiments with the payments, yeah, with central bank money, with commercial bank money. There are already, let's say, alternative solutions. Stable coins are also interesting solutions. But we are open. We have like open homework in the area of providing scalable payments in a sense of capital market treasury use cases. So I apologize for my bias, so I'm coming from that area, yeah, so I'm always thinking like in central bank money. And then we also need to make these financial instruments be the first-class citizen then and comparable to the same financial instruments in status quo. Yeah? And then we come to things like collateral eligibility at ECB level and so on, but it goes beyond that. So the main goal is like to make it first-class citizen and not always like talk about them like being something different, because they are not different. It's the same financial instrument that happens to be on a new kind of financial market infrastructure that happens to run on DLT, right?
Okay, so some homework for central banks I'm hearing. Tim, could I ask you as an issuer looking at this market, what would you want to see in order to see scaling on the issuance side and also on the more interest from the buy side?
Also, I'm not a digital native, so I listen a lot about my investors who buy the papers. Yeah? And if I look what's important for an investor to buy KfW paper, that's the AAA rating, so that will be the same. And it's liquidity. So more or less it has ever been said. So it's the HQLA, the ECB, the also regulatory LCR, eligibility, I think is a key point. Also to see from an investor perspective and issue perspective, if that's not there, then the underlying asset will have a different price. And that means also, as an issuer, I will have different cost of funding, yeah, from an economic standpoint. So this is really, for me, one of the foundation topic. We have to have the same situation or the same features what we have today, that the investors accept also today's secondary market pricing, yeah. Because if not, it is, of course, from an ALM point, also an instrument which I have questioned myself, especially as a public institution, why I use this instrument, yeah, on a long-term scale, because if I transfer this on the asset side, it will make my promotional business more expensive. So you have to think the whole chain through that in that topic. I think also we need functional secondary markets, so the rails are very important in that topic, the interoperability, what has been said, and I think common data standards is also very important, yeah? So that we have the same understanding about the data standards.
I think we have a lot of puzzle pieces, as you also, Jonathan put it before. I really like that analogy in place now. So that's a good thing. So when you're asking what is required, we have so many things that are in place now, such as regulation, such as technology, such as regulated players, be it in custody, in tokenization, in trading settlement. So it's a very good point. And now, in my opinion, the thing that's missing is really like moving from a proof of concept stage to a production stage and going like with full scalability use cases live. And there I totally agree. There are different, not details, but very important points then in the nitty-gritty things that are still missing. And the level even like the level playing field is one of the important things, such as ECB eligibility, totally agree there. Data is one of the topics we are looking at very closely. And I think those are topics the industry is working on, but the most important thing that we are gonna get into this let's do it for real now mode. So it's not proof of concept stage anymore. We are already, the industry is ready to go full production phase, so we should start doing that, in my opinion.
And I totally agree with what being said, and I think there are three things. So the use case is key. Honestly, nobody cares it's a token. So if it's to do the same as before in a more expensive way, what's the point? So there have to be some benefits. So we have to think about holistically about the value chain. And I think the holistic refers to the value chain and the ecosystem, not to the infrastructure eventually. Because we know it's going to be multiple networks and multiple token types, etc. But thinking holistically about how it's going to be used and how it can serve my whole ecosystem along the way, that's where we can reap the benefits of all that and we can drive adoption in some way. And the other thing is the standards. I totally agree, and not saying that we should set up standards, but there should be a limited amount of primitives that we can share all together. Again, everybody can develop its own token and deploy it on whatever network, but at least we have to have a basic set of primitives. Even the ISIN, how is it written? Is it underscore ISIN or ISIN underscore? It's not the same data. I think this will come from the market itself, from the right use cases, which will define some sort of the standards. And then the last one, and that's more because I'm into capital markets, we want to think about composability, but we need a cash token. So wholesale central bank digital currency is certainly something we're expecting and working on. And we've been pretty active as BNP Paribas in the ECB trials and experiment. We tested the 3 solutions. So we definitely think it's important for this model to happen. And I think the next big thing will be tokenized identity. So let's talk about this in 27, I guess. But KYC will certainly come into play at some point.
Okay, well, that sounds like a good wish list that we've compiled here. So that's great. I just want to see if there are any questions from the audience or. Been very, very clear, so that's good. Are there any sort of final, last famous points that you want to leave with here? Any final points in terms of this is really important, this is what we need to focus on, things that we absolutely need, any things that haven't been mentioned yet?
I mean, I would add probably, obviously, we cannot control everything. All of us here sitting, we can only control what we are working on and in partnerships. And I would echo, what has been said around this point. I think we have the rails, we have the assets. So let's make sure we leverage them and we make sure we collaborate and make, interesting use cases, commercially viable use cases to grow the ecosystem.
Great. Well, Tina, go ahead. Lidia, go ahead.
For me, maybe as a last note, I mean, we have been talking all day about challenges, and for me, it's very important also to close on a very positive note. We are very much looking forward to go live in Switzerland now with our trading system, and being part of the Börse Stuttgart group, we have a clear European ambition. So I think it's a lot of interesting. Ways, projects ahead of us, and I'm very much looking forward to that. I think we are in a good stage in the industry at the moment.
Okay, always good to end up on a cheerful note, I would say. So I think hopefully we've made the picture of the future somewhat clearer. I think we sort of know where we have to move towards. The train has left the station, and now it's all about speeding up. So thank you very much, and thank you all for your attention. Thank you.